Deven Choksey, who's the Managing Director of DR Choksey FinServe Private Limited, joining us on the show. As well as we also have Kunal Bothra. I can see Kunal on the screen. So Kunal, firstly, let me come to you to know the levels for Nifty as well as Bank Nifty. It's been a great day throughout, but do you believe that for today, the move is largely in the price, or rather in the last 1 hour, we should just consolidate at these price points, or do you believe that there could be some more move in the offing?
Yeah, good afternoon. So I think largely we are done for in terms of the market range today. What we've seen, Srishti, is that last 3-4 days, the move for the index is still much more steep. So we are looking at 250 points on an average index moves on the Nifty, that is, and almost 500 points for the Bank Nifty. That's almost an ATR on an average true range of 1% for the Bank Nifty as well as for the Nifty. This comes at a point when the India VIX is still at 16 and a half to 17 and a half kind of a range. What generally happens is that once the VIX stagnates or at least drops down a little bit, you see the ranges narrowing for the index. So far, I would believe that we are still into that high volatile zone for the index. In terms of support, we are holding on to that 24,000 mark. 23,800 is the support which I pegged up for the Nifty in the last week or so. We managed to have a retest towards that 23,800 mark and bounced off from those levels. And I think now on the upside, we should be looking at 24,500 to 24,800 as a potential target range for the Nifty.
Right. Good afternoon to you, Kunal. Good afternoon to you, Mr. Choksey. Thank you so much for joining us. And Mr. Choksey, what a great day to actually have you on the show, given the fact that you have Big Bull Reliance Industries 5% uptake. It's been a while that we've seen this one actually move with that sort of a pace. And you've been tracking Reliance Industries for years and for decades now. How would you actually put this sort of earnings into a bracket for Reliance Industries? Do you think that now it is the time to actually focus on the next leg of up move for Reliance? It would be that impending Jio platform listing, or what is the key trigger that you are watching out for Reliance, and actually that sort of a outperformance coming in from the stock?
Good afternoon. Well, I think the more importantly in the fourth quarter result, one very prominent thing which has emerged, and that is the consumer-facing businesses, the Geo platform and retail. Both of them put together, they are probably 60% of the total EBITDA of the company vis-a-vis the O2C business and the oil and gas exploration business, along with others. So I think what one would probably drive a point here, that the consumer-facing business for the first time have crossed, I think, the contribution in EBITDA compared to the mainstay business of the company, which is hydrocarbon-based, which means that I think the larger amount of growth is now being seen in these businesses, which also means that having done good amount of restructuring, particularly on Reliance retail stores, wherein they closed some of the non-performing stores and added the performing store formats, I believe that it is likely to grow in a vicinity of around 15% odd in retail itself. And at the same time, Geo platform is likely to contribute in the range of 15 to 20% kind of a growth in the current year, 25-26, given the fact that they already implemented the large capex program under 5G. So to a greater extent, I think this is the key takeaway from the result as I see it. Fortunately, oil to chemical and oil and gas business, I think, should be looking better in the current financial year now. Also, due to the fact that the crude oil prices are remaining lower and the better GRMs are expected in the current quarter and after for Reliance Industries. And I think the last one, which is the capex program, which they have undertaken in the renewable segment, is also likely to see the light of the day. Apart from seeing the Geo platform probably getting announced on the listing side of the activity. So this is some of the key takeaways which I find that I think makes the stock more interesting than before.
All right, that's the take coming in on Reliance. Definitely a great move. But Mr. Choksey, do you believe that with respect to the points that you just highlighted, the move that we are witnessing in Reliance today, it's just the start?
You can say so, because I think the majority of the capex programs are over, and particularly in the consumer-facing businesses. Now the capex program would probably limit itself to two areas: the renewables, of course, and in some segment, I think the O2C business as well. So I guess I think the growth momentum will continue as far as the company is concerned. And the significantly large amount of underperformance of Reliance in previous quarters probably also means that I think participation could possibly increase now as far as the market participants are concerned. So yes, I think on one side fundamentals followed by the higher amount of participation by the market participants could possibly keep the stock price a little bit more upbeat.
Kunal, let me come to you. And do you think up ki bar it will be Reliance Industries? And finally, when you say up ki bar Reliance Industries, it will actually stay true to it and actually outperform, because we've been actually waiting for that outperformance. In fact, charted the fact that it will see an outperformance. From there on, somehow you find that resistance for Reliance has not been able to break past those resistance levels. What's your take? Now it's time, it is confirmed that this outperformance will be led and it is here to stay.
So it looks like, Cheryl. So, these are all developing phases for stock prices because, there's a natural reaction to the stock on the back of, the news flow in terms of results. And then post that, I think we then need to see that whether the actual supply and demand for, the stock price persists for Reliance Industries. Now, today, what's happened is why today's move is very important. Of course, not just in the context of the results, but the technical part for Reliance Industries today is that for the first time, I think, if I'm not wrong, in the last 2 or 3 months, the stock has managed to break past about the 200 DMA. So this is a big breakout for Reliance Industries. And historically, whenever the stock has managed to break past about the 200 DMA, even if it persists about those averages or sustains about those averages for, say, a couple of weeks, it actually sees a much more bigger follow-through up move. And then the stock starts to go back into a trending phase. So I think it's more of a work in progress chart when I look at this. Say in the next few days, if you see the stock holding on to this 1350, 1400 kind of a range, for Reliance Industries, we could be looking at the stock moving up higher. But in case if the stock say drifts down lower, breaks below the 200-day moving average and doesn't persist above those levels or sustain above those levels, then we could be looking at a reversal of sorts for the stock or maybe some sort of a profit booking. So I would probably peg this on in terms of the indicator levels, and 200 DMA is something which is going to be very, very important because historically it has had a very significant impact on the trends for Reliance Industries.
Deven, what we are seeing today is the PSU banking names are participating very well. And Deven, in the past 2 months, if I see private versus the PSU banking index, then the PSU banking pack has definitely outperformed. In the past 2 months, PSU bank index is up 20% versus the private bank index, which has gained almost 14%. How do you see both of these segments performing, as well as which one is your preferred bet and which could outperform in the times ahead?
Well, I think we'll take up this question in two parts. I think importantly, most of the PSU banks' treasury book will look up in this particular quarter because having seen 2 successive rate cuts, most likely, I think you're likely to see in the current quarter included the mark-to-market gains on the hold-to-maturity portfolio that the banks are having on the GSEC. So that will probably smartly show a higher amount of growth on a mark-to-market basis because of the resultant fall into the interest rate and the yield improvements. So that is where probably most of the public sector banks' up move can be explained or justified. Looking at the fact that I think the rate cuts are just begun and then another 4 to 6 quarters of rate cut will probably continue. In my viewpoint, I think there is the trend which these banks are assuming at this point of time. Otherwise, though other fundamentals they remain better, but at the same time, nothing significant about it. Some of the large private sector banks, that's a separate question. Some of the large private sector banks, in my viewpoint, I think relatively remain stronger. Largely because of the size that they have already got catered into the large segment of customers. And at the same time, I think lower cost of fund, the NIM is on improvement side and the dispersal is on the higher side. So it's a sweet spot. You're getting the advantage of higher dispersals and better NIM promises to produce better profitability for the companies.
If you like this video, then like, share and subscribe to ET Now.